Good evening, everybody. So today I'm going to look at December as a month. I think some people perceive it as a bit of a stick or twist month, really. You know, should I bank everything I've hopefully made, or in my eyes, unwisely chase maybe some losses that just to try and get even on the year. And also, we have said in there, this whole concept of a Santa rally, which, whilst is it a myth? Who knows? But I think statistically it can probably be dismissed as unreliable. So from a professional perspective, how should we look at December? Well, I think it's quite simple, really. We must stay focused. December this year, and has been on some other years, it could be a game changer. We really are at a pivotal moment, potentially, from a rates perspective, this fight against inflation. And we've got some really, really important events coming up this side of the Christmas break. So, my advice would be, there's opportunity here. And we need, as professionals, to try and take advantage of that as much as we can. But we clearly have to be careful, given it is the back end of the year, and maybe we will start seeing a drop off in liquidity. And as we know, volatility is here to stay. But we've been dealing with that most of the year. So hopefully we've gained some good experience to be able to cope with such moves. So what have we got? The December checklist. Well, let's use that calendar wisely. Let's not just open up our desktops and just start trading randomly. Let's really look at what's coming ahead of us. Let's make sure we trade the meaningful data. We know it's data that's moving markets, so why don't we wait for this data, but trade the meaningful stuff? If we're looking at UK industrial production, what do we think we're really going to gain from that? Let's focus our time on what's really going to be important in this short period leading up to Christmas. And clearly that's going to be anything that's going to drive interest rate decisions, and inflation is the core of that. So we've got US CPI numbers. We've got some rate decisions coming up from the central banks. We've got some UK CPI numbers as well. So I think we should be looking at that calendar and trading the data that comes from that. Let's not chase every event, and certainly let's look at it from a perspective of what can I gain out of this trade? Where does that fit within my annual P&L is actually a little bit irrelevant to a degree. We don't chase things to try and recoup losses. We only look at markets if we feel there's opportunity there. So what else is on our checklist? Well, we have to understand sentiment and market positioning. We saw big moves in November off the back of the real change in inflation out in the States. Whether that's going to continue, we don't know. But sentiment was round the wrong way, and that's why it moved a lot. We may find that if our interpretation of sentiment, in these numbers coming through, is that the market may be quite reticent and maybe a bit flat. We've seen the markets rally, and we've seen the last 4 days the equities have dipped. Does that mean the market's position particularly one way? Possibly not. So we may not see such extended moves, and we have to understand that and accept that maybe we may not get the aggressive moves that we saw on the November CPI. And so we have to trade accordingly. So very important to understand that. It's a bit of a feel-good factor, that one as well. So what else do we have to keep looking at? Well, my advice to you is to trade the individual data and that event. Cherry pick the important, meaningful ones. And obviously I'm looking at the big economies there. So we've got US CPI numbers, UK CPI numbers, interest rate decisions out of the big G7 global economies. Let's look at those as opportunity. And please, let's not try and get ahead of these numbers. Let's not premeditate what the number will be. There'll be enough time and enough liquidity for us to wait for that number and respond to that number, and hopefully getting a little bit of P&L out of it. If we go into it with a predisposition to up or down, we could be on the back foot immediately. And what we really want to do is try and pick 4 or 5 trades, right up until the Christmas break, where we can gain a little bit of extra money and finish the year on a high. That's what we really want to do as well. Other key things that we need to do, obviously, is continue with our preparation. So everything we've been doing, let's continue to replicate that. Pick the right product to be in, pick the right event to trade, and execute according to our plan, as we have been hopefully throughout the year. The other key thing as well is taking each one in its merit. And what do I mean by that? Well, let's not assume, we've got a CPI number coming out, and then the day after we've actually got, a rate decision from a central bank. We got that in the US and in the UK. Let's not assume that if that CPI number, outperforms either way, that we're going to get exactly the same response the next day. There is a lag in some of these numbers. So let's not just, let's say we end up agreeing that we want to be long of equities after the US CPI number. It still says inflation's in check. Let's not assume that everything we get from the Fed the next day is going to be according to that messaging, because there is a lag and they are different events. What we need over a period of time to make sure they all line up. But, we shouldn't naturally just stay long of those equities after the CPI number, expecting, a fairly bearish sentiment from the Fed to help that move continue. Let's get in, let's get out, and look to trade the next event. And if we don't feel we want to trade that next event, you don't have to. There's no obligations here. It's just a better way of trying to make sure we don't just go chasing numbers all month long. The next key thing for us, there will be volatility. As I say, we've been trading through it. Let's respect that volatility. There will be reduced market liquidity, but we will still be able to get our trades done. It's not going to restrict us in that respect. But we are going to see potentially some nasty reversals in that. They're the ones that are very difficult for us. Because of that, because of the speed of some of those moves, we need to adjust our risk accordingly. We need to say to ourselves, I'd rather be too long and get it right than 10 long and be stopped out because it gets too expensive on a nasty reversal before it potentially goes back in my favor. So let's use our risk barometer, as we see there on the left-hand side. So can we be, a position of high confidence? We could be, if we really like the number that comes out, but we should then adjust that according to, potentially the time of year, the volatility, and the liquidity that's out there. And when we look at stop losses, maybe we should be moving them a bit further away from the market, anticipating some of these reversals, and that could define the size of our position anyway, because it could become unaffordable if we go gung-ho on a trade and put the stop loss a lot further away. I'd rather be comfortable in having a correctly placed, affordable stop loss, because that'll take away the anxiety for me, and it'll allow me freedom of thought once I'm in the money and I can start getting a little bit fancy about my take profits. My final message to you would be, during this holiday time, where maybe we are trading a bit less, we maybe have a little bit of time on our hands, and eventually, maybe after the 16th, where we saw, I think there is, some UK data out that we may want to trade. We may want to really relax our trading after that. We might run a small themed trade going across the holiday period. Again, much reduced size, bigger stop loss to accommodate any crazy moves over that holiday period. But if we're doing that, it should still allow us a bit of downtime. It's very important for us, for our mental well-being. Use that downtime to decompress. Go enjoy your time with your partners, your families. If it's sport that you want to go and do, a little bit of downtime, a bit of gym time, let's go do it. Let's renew those energy levels for a big year next year, because it certainly is going to be that. But whilst we do that, when we've had too many mince pies, when we're fed up with board games as well, maybe we go to our quiet place. Make sure we don't switch off completely. Catch up with any market news, stay engaged with the market themes, and so that we can hit the ground running in the new year. And if we do get a little bit of extra time, what I really would advise you to do, in the same way that we evaluate our trades maybe on a weekly basis, no big post-mortem, let's have a little bit of chat with ourselves. How much have I enjoyed my trading? Is it something I want to keep doing? Is it something I want to do more of? What have I achieved? And have I achieved that relative to, what I set out to do? And if I'm going to set myself some goals, which I really would advise going into 2023, we have to make sure we set those, bearing in mind if anything has changed over 2022, whether it be financial circumstances, anything personal, that may change the way you looked at the markets in 2022. Let's incorporate that in 2023. Let's set out some nice, excuse the corporate jargon here, some smart objectives, make them specific, make them measurable. So if you're looking to set out to make a certain amount of money, make sure, clearly we can look at that P&L on a daily basis. Don't get completely consumed by that, because we're going to have runs of bad trades as well. The art of that is to manage the run of bad trades so you can come out the other side and capture good profits. But let's also make them achievable. Just a simple one there. If you're only going to be able to trade for 2 sessions a week, then you're not going to set out to try and make £1 million a year. That kind of thing. It's got to be realistic to your circumstances and what you are trying to achieve. And also, if I can give you a bit of advice, timely as well. Set yourself some short-term targets, medium-term targets. And as well, if trading is something you're really, really interested in, have some longer term aspirations that you can build up to, whether it be an increase in product set or, running a portfolio of trades, anything like that, something nice and aspirational. So that's it from me. Hope you've had a great year, and let's have fingers crossed that we can use all our skill sets that we've learned this year and move on into 2023 with a lot of confidence. And on that note, I wish you all a great winter break, a happy Christmas, and I'll see you all in the new year.